Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the US dollar and the most important event of this week. That's the non-farm payrolls and the opportunities its publication will present. My name is Sasha and I'm a financial analyst from the research department at ForTrade. I'm delighted to have you with us. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. And now, let me explain what a market opportunity is if you don't know. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction, so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis, according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's your decision whether you want to trade on a market opportunity or not. So here's an example of a recent market opportunity. Here you can see some fundamental analysis on what's going on with the euro-dollar currency pair. You can see that this is a downtrend opportunity over a weekly period, since our analysis suggests the euro would decline in value against the dollar. At the top, you can see some geopolitical events and fundamental analysis that can influence the euro-dollar currency pair. For example, the part on the EU and its disagreement with the Italian government over its budget, which has put pressure on the euro. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1.1381 that you can see on the right hand side of the screen here, this shows the right moment in our estimation for opening a trading position. That's had you decided to trade on this market opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further along. At these points you can put a stop loss and take profit, and further down you have calculations. If you close the position using take profit, you can expect these kinds of profits at the support levels in green. If the price is going against you, you can potentially have a loss of this amount at these resistance levels in red. Finally, profit and loss calculations are based on a one-lot trading volume. So let's take a look at where the dollar stands at the moment, and we'll briefly take a look at the main factors influencing its current value. As you can see on the graph, the dollar has been in an uptrend against a basket of other currencies over the past year. This partly has been due to weakness in other major currencies. For example, Brexit in the UK has seen the pound fall, and softness in the Eurozone economy has put the euro under pressure. One of the main price drivers for the dollar at the moment is the resilience of the US economy against its rivals. Other main price drivers of the currency include interest rates set by the Fed and strong non-farm payrolls reports. Over the past year, the Fed has hiked rates 4 times to its current rate of 2.5%. This has supported the dollar. Another factor to bear in mind is the trade war. The dollar has been used as a safe haven currency since trade war tensions stirred in April last year. Last week, though, the dollar turned lower, as increasing tensions between the US and China and data supporting a continued global slowdown is causing many investors to believe that the Fed may reduce interest rates by the end of the year. So, why is the NFP so important for the financial markets? Well, the non-farm payrolls report is the release of data on US jobs growth over the previous month, published by the Bureau of Labor Statistics, usually on the first Friday of the month. It's the most eagerly awaited monthly data by world markets. Morning trading volumes are usually slim in European markets on the day of the release, as they await the afternoon release time. The headline number in the report gives the number of jobs that the US economy has gained or lost over the previous month. A more important number number for the markets, however, is the difference between the actual change and the consensus of estimates by analysts and economists published in advance. The market reaction will depend on whether the published figure is above or below the consensus and by how much. Over the past few years, non-farm payroll data has been very positive. Last month's figures were better than expected, as I will explain in a moment. As you can see here, the unemployment rate has significantly improved in recent years. The unemployment rate approached 8.5% during the financial crisis, but has fallen since. The unemployment rate has recently fallen to 3.6%, its lowest level since 1969. Average hourly earnings is important since an increase in the figures indicates a possible rise in inflation and in the value of the dollar, while a decrease in AHE tends to push the dollar down. Month on month, average hourly earnings was 0.2% in April. The NFP release comes together with the unemployment rate indicator on the first Friday of every month. When this is due, the trading week is a range-bound one for the forex market, and after the release, traders start positioning for the next time the Fed meets to see how monetary policy changes in the meantime and how to react. When the actual number differs from the forecasted one, the market travels. Usually, traders take positions for the NFP in advance by looking for clues from other economic data like the ADP jobs report or private payrolls. The unemployment rate is part of the Fed's decision-making process to move on interest rates. Generally, a lower unemployment rate is better for the economy as jobs are created, and this could result in the Fed hiking rates. Higher rates lead to a higher dollar. There's no such thing as full employment in an economy. By the time the unemployment rate has fallen to below 4%, a labour shortage has already appeared. Forex trading is about anticipating what the central bank is going to do with interest rates at the next meeting, and the NFP is the perfect economic release to position on the right side of the market. So the non-farm payrolls report released on May the 3rd, 2019 showed that the US economy created 263,000 new jobs in April. That's better than the predicted estimate of 181,000 jobs. The jobless rate declined to 3.6%. That's better than the 3.8% expected. Following the publication of the release on May the 3rd, the dollar climbed by 0.57% by the end of trading, as you can see on this slide. The NFP result was good, but the good unemployment figures but worse than expected average hourly earnings saw the dollar fall. Upon digesting last month's data, investors decided that the results increased the chances of a Fed rate cut by the end of the year, causing the dollar to fall. As far as the euro-dollar is concerned, the currency pair jumped higher by some 0.53% before dropping sharply and then settling up by 0.25% by the end of the trading day. The euro continues to suffer from weakness and high volatility due to sluggish economic performance in the eurozone, EU political and financial issues, including Brexit. The thing to keep in mind is that the dollar is often volatile on the day of the NFP, but that the NFP can also represent a good trading opportunity. So what can we expect from this week's report? Economists expect that this month's NFP will record that 183,000 new jobs were created in May, and that the unemployment rate will remain at 3.6%. Traders would also be advised to keep an eye on the average hourly earnings figures. If they are above expectations, it may push the dollar higher. Average hourly earnings are considered a sign that inflation will rise. Average hourly earnings are expected to grow from 0.2% to 0.3%. A fourth interest rate hike last year took place in December, but there are no signs of any potential increases now. Hikes have been opposed by President Trump, who favors lower rates, but it seems that his constant criticism of Fed officials and fears over an economic slowdown has hit home. Increasingly, traders believe that the Fed may cut interest rates towards the end of the year, although Fed officials have only spoken on data-driven policies. On March the 20th, for example, Fed Chair Powell stated that there would not be any hikes this year. The dollar has been volatile and has pushed higher against a basket of other currencies as investors turn to the currency as a safe haven. In any case, it's certain that reports like the NFP can have a major influence on the greenback and the financial markets. The global economy, on the other hand, has been weaker, which has concerned investors and put pressure on stocks and emerging market currencies. Another factor to bear in mind if you are trading the dollar is the trade war. The dollar has functioned as a safe haven currency, as many investors believe the US is in a better position to ride out a trade war than other countries. So if you're looking to trade the NFP as a short to medium term move, you should consider that as trade war tensions increase, the dollar tends to increase in value against other currencies. On the other hand, if you believe there will be an end to the trade war sooner rather than later, this scenario would likely influence the dollar downward against other currencies. But the trade war is an important factor, but not the only one when trading the dollar. Of course, we at 4Trade will be following any developments that affect the markets very closely, so please do get in touch with a senior account manager if you have any questions or want to take advantage of the trading opportunities that the NFP will present. Until next time, goodbye, and please join us at 4Trade again soon.